Hey, my name is Todd Hudson. I'm the creator of the intraday momentum method. This is a more scientific approach to trading. It has been designed for intraday trading. In this video, I'm going to go over chapter 14 of my book, which is the first study of applying um, any sort of rules for entry and exit for the intraday momentum method levels. The first study, the rules for the study are the ML1 is reached, you take a long position at ML1. If the MS1 is reached, you take a short position at the MS1. Only one position is taken throughout the day and exit all positions at the close of the day. For the sake of simplicity, the results are calculated as if there were a single share taken at the entry price. This is a example of the research that I track every day. I develop web-based applications that would allow me to track the ML1 and MS1 levels, as well as the trend and extended levels, um, and other important factors um, and data throughout the trading day. As you can see, the ML1 and the MS1 are calculated from the open. The ML1 is a calculation added to the open, and the MS1 is a calculation subtracted from the open. The goal when creating this method was to come up with something that was reasonably accurate, and by that around I thought that if we got 45% or greater, we would have something to work with in terms of trying to determine the direction and how we should trade the levels. In this study, we take the levels as they are given. So if the market goes up to the ML1, a long position is assumed, and if it goes down to the MS1, a short position is assumed. The results, as published in the book for February of 2022 to January 2023, we had 55% of the time there was a success rate of entering the levels. Um, Obviously, without a stop loss, you would not expect to make any money or a profit target. This came out to be positive, um, although I'm certain that the swings in the P&L were probably really drastic. As you can see, the win-loss ratio was 0.86, which means that the losses were greater than the wins. What this means is that a stop loss would definitely improve that um, over the course of time. How do we take this information and use it to our advantage? First, the percentage win rates are acceptable starting point. Is something we can work with and can be improved. Adding a stop loss would reduce the percentage wins, but would likely improve the win loss average. The reason it will reduce the percentage wins is because there's not a reentry strategy. It's just one entry. So it's got one chance to be success or fail. I also present quite a bit of information about other levels that I have not discussed here in the book, and those are midpoint between these levels. If those are reached, um, the success rate actually tends to be slightly lower. In order to improve the win-loss ratio, we would implement a stop-loss order. Any reasonable stop-loss would be beneficial. Profit targets would also be beneficial, especially when the market has reached extended levels. And that would be just a really good starting point for adding profit targets. So to improve the strategy just from 55%, like I said, adding a stop loss would most likely reduce the percent win rate, but it would improve, most likely it would improve the win-loss ratio, the average win divided by the average loss. Adding a profit target would probably smooth out over time your P&L. You could enter on pullbacks from the intraday momentum method levels. So if the market went up to the ML1, you could approach this from a pullback strategy from the high, or if it went down to the MS1, you could also use a pullback back to the open or in between the open. One of the things that I mentioned in the book is fast moves. One of the traders I studied often said that fast moves come from false moves. Well, these entries are irrelevant of the time of day or the speed at which the market got there. Having a strategy for fast moves is very important because the fast moves oftentimes turn into intraday reversals, which means that the ML1 and the MS1 were reached in the same day. That pattern can happen at any time. Um, Most of the intraday reversals, though, are levels met very early on in the trading day. You could also define patterns such as double tops, double bottoms. You could use Fibonacci ratio retracements off of the intraday momentum method levels because it would most likely give you a better understanding of what the market does at those levels over time. You could use pattern-based filters to determine when to trade and when not to trade. You can also determine if you should trade or fade specific patterns. There'll be times when you have an MO1 that you would actually want to fade a move to that level. Fast moves are one of the examples that you could fade the move, specifically if it happens very, very early on. The first 10 to 15 minutes of trading, typically those fast moves have a tendency to reverse and oftentimes go back at least to the open. I'll be adding more videos that go through the book and the strategies studies in the book. Uh, I'll be uploading those in the coming days, weeks, and months. The book is very informative. I keep track of this stuff on a large number of stocks, not just these ETFs. I broke this down into ETFs so that I could um, give a better understanding of what I was trying to do with the intraday momentum method. If you have any questions, visit the website at qatsystems.com or contact Todd Hudson, that's me, at toddhudson at qatsystems.com. Have a great day.